All right, let's dive in. Today we are talking about the epic 150-year story of a single bank. A bank that wasn't just built for profit, it was built for an empire. And then, it was totally rebuilt for a brand new nation. This is the story, really, that shaped the entire financial backbone of modern India.
I mean, think about that for a second. It's a huge question, right? Put yourself back in the early 1800s. You've got this massive, diverse subcontinent, dozens, maybe hundreds of different currencies floating around, and absolutely no unified financial system to speak of. It's kind of chaos. So where on earth do you even start?
Well, the answer might surprise you. It didn't start with some grand plan for a nation. No, not at all. It began with something way more practical, a need for control. Specifically, the needs of the British East India Company. They had to manage trade, they had to collect revenue, and most importantly, they had to lock down their colonial power.
So to really get why a new bank was just so critical, you have to picture what was actually happening on the ground at the time. We're talking about a complete and total financial void. So what did that look like? Well, there was no structured banking network, like at all. The currency you had in one region might be useless in another. And if you needed a loan, you were probably going to an informal moneylender. Now, imagine you're the British East India Company. You're trying to manage huge amounts of money from taxes and trade. This whole system is a nightmare. It's just not workable. They desperately needed to bring some order to the chaos.
So what was their solution? Well, the British started a kind of experiment. To try and tame this financial Wild West, they created a totally new kind of institution, these powerful, semi-independent banks that would become known as the presidency banks. Now, this didn't happen overnight, not by a long shot. It took almost 40 years for them to set up what became the three pillars of colonial finance. It all kicked off in 1806 with the Bank of Calcutta, which later became the Bank of Bengal. Then you fast forward a few decades to 1840, and the Bank of Bombay pops up to handle all the trade in the West. Just 3 years after that, in 1843, the Bank of Madras is created to service the South. Each one was planted strategically to control a vital economic hub.
So what exactly was a presidency bank? You can kind of think of it as a hybrid, wearing two different hats. On one hand, it's a commercial bank, doing business with big traders. But on the other hand, it acted almost like a mini central bank for its own region. It was managing government money, printing currency, and basically acting as the financial muscle for the British administration. And for a good long while, this three-bank system worked pretty well. But then, things started to change. India's economy was modernizing. We're talking railways, new industries, the whole shebang. And suddenly, having three separate, powerful banks started to feel, well, inefficient, clunky. It was clear that it was time for a big consolidation, a move that was about to create an absolute giant. And that brings us to 1921. The solution? Just merge them all together. The Bank of Bengal, the Bank of Bombay, and the Bank of Madras, those three big pillars, were combined into one single monster entity, the Imperial Bank of India. And this was a huge deal. We're talking about the creation of one of the biggest banks in the entire British Empire. And if you want to understand just how massive this new bank was, you only need to know one number: 70%. That's right. When it was created, the Imperial Bank controlled 70% of all banking assets in India. That's not just big, that's almost total domination, an incredible amount of power. So this new Imperial Bank basically inherited that dual personality we talked about. It was still wearing those two hats. Part of it was a regular commercial bank, taking deposits, handing out loans, but the other part was still acting like a central bank, managing the government's money, handling public debt. All of this, by the way, was happening long before the Reserve Bank of India even existed. But, of course, history waits for no one. The world was changing fast. And with India's independence in 1947, the Imperial Bank, as stable and powerful as it was, started to look like a dinosaur, a relic from the colonial past. A brand new, independent nation had very, very different priorities. Look, the Imperial Bank was great at its job, if its job was serving big city businesses and the government. But it had this one enormous blind spot: rural India. And remember, that's where most of the population lived. So for a new country that needed to focus on agriculture and developing the entire nation, well, this was a huge problem. So, what was the solution this time? It was radical nationalization. In 1955, the government of India didn't just tweak the bank or reform it. They took it over completely. And this wasn't just about who owned the bank. This was a fundamental change of its entire mission. It was like they were reprogramming its DNA, from serving colonial commerce to driving national development.
And the transformation was total. Ownership, it went from private shareholders to the state. The primary goal, forget just making a profit. Now it was about national growth. And the most critical shift of all, the focus swung from big city business to rural development and inclusion. The Imperial Bank of India was gone, and in its place, it was officially reborn as the State Bank of India.
You know, when you step back and look at the whole picture, it's so much more than just a bank changing its name. It's really the story of an institution being completely reshaped by the powerful currents of history, evolving right alongside the country, from a colony to a nation. So, you have this incredible journey. It starts with a simple, practical need for colonial control, and it ends with the creation of a powerful engine for national development. This whole 150-year evolution, from that very first presidency bank all the way to the State Bank of India, it literally laid the foundation for the entire modern Indian banking system we see today.
And that just leaves us with one final thought, really. This bank has been constantly evolving for over 200 years now. It adapted to an empire, it adapted to independence, and now it's adapting to a globalized digital world. It really makes you wonder, after all that, what could possibly be the next chapter in its incredible story?
Today, let's talk about something huge. We're going to unpack the incredible story of how a single bank went from a colonial relic to the financial backbone of an entire nation. This is the story of the State Bank of India, or SBI, looking at its most crucial, foundational years.
So, let's set the scene. It's the 1950s. India is brand new, a freshly independent country with massive dreams. We're talking about huge 5-year plans to build dams, factories, and to completely transform agriculture. But to pull all that off, you need one thing above all else: money. A lot of it. The problem was, the banking system they inherited was built for cities, for big business, not for the millions of people living in the countryside. And that was the fundamental challenge they had to solve.
So how do you fix a problem that big? Well, the answer was pretty radical. Instead of just trying to patch up the old system, the Indian government decided to create something totally new. They envisioned a bank that wasn't just about profits, but about a national mission.
And this all comes to a head in 1955. The government nationalizes the old Imperial Bank of India. Now, this was way more than just a name change. By taking it over, they completely flipped its purpose on its head. Out of the ashes of that colonial institution, the State Bank of India was born, and it was given a massive job: to fuel the economic growth of the entire country.
Okay, so SBI has its marching orders, but how did they actually turn this grand vision into a reality on the ground? Let's get into the nitty-gritty of their strategy, because it was pretty revolutionary for its time.
You see, the old way of doing things was, well, simple. You stuck to the cities where all the money and big businesses were. It was profitable and easy. But SBI's new mission, it was a complete 180. The goal was to take banking out of its comfort zone and push it into the towns and villages, to reach literally every corner of India. And when I say they expanded, I mean they exploded. SBI went on an absolute tear, opening hundreds and hundreds of new branches. And the key thing here is they weren't just popping up more offices in Mumbai or Delhi. No, they were going into semi-urban areas and, most importantly, into rural regions that had never ever had a bank before. They were literally putting the entire country on the financial map.
So you've built the buildings, you've put up the signs, but that's kind of the easy part, right? The real question is, how do you actually design banking services for a population where farming is the main way of life, for people who've never really interacted with a formal bank before?
Well, SBI knew they couldn't just sit back and wait for customers. They had to be proactive. They came up with some really clever programs. Take the lead bank scheme. This basically put an SBI branch in charge of all banking development for an entire district. A few years later, they helped set up special regional rural banks. The whole point of all this was to funnel money directly into agriculture. The game plan was simple: gather up all the small savings from rural families and then lend that money right back out to farmers so they could buy seeds, fertilizer, and better equipment.
Now, having a ton of branches is great, but if the bank itself is a mess internally, it's all for nothing. So while SBI was pushing outwards at this incredible pace, they were also doing some serious work to transform themselves from the inside out. To manage this kind of explosive growth, they had to get modern, fast. For one thing, they invested heavily in training their staff to be true professionals. They also started automating their core processes, because there was just no way to handle the sheer volume of transactions by hand anymore. And finally, they built out specialized departments to handle the more complex stuff, like financing big industries or dealing with foreign currency.
And all of this really cemented SBI's unique role. It wasn't just another commercial bank. It was, for all intents and purposes, the government's financial arm. When the government wanted to launch a national savings scheme or finance a massive steel plant, who do you think they turned to? SBI. The bank's mission and the nation's 5-year plans were basically one and the same. But you know, this kind of crazy, mission-driven growth, it never comes easy. It was a bumpy road, and it came with some absolutely massive challenges and risks.
And this right here is the central dilemma SBI was constantly wrestling with. On one hand, their job was to pour money into rural India, which was essential for the country. But on the other hand, lending to agriculture is risky business. One bad monsoon, one drop in crop prices, and a farmer might not be able to pay you back. This led straight to a huge challenge, a rise in what bankers call non-performing assets, or NPAs. That's just a fancy term for loans that aren't getting paid back. And that, of course, puts a real strain on your finances.
And it wasn't just the bad loans they had to worry about. With a network so vast, it was tough to keep the quality of service consistent everywhere. Plus, other banks started to see what SBI was doing and began to compete with them. It all meant that SBI had to get smarter and smarter about how it managed its risks.
But here's the amazing part. Despite all these massive hurdles, SBI didn't just stumble through. It learned, it adapted, and it came out on top, solidifying its place as the undisputed king of Indian banking.
So after decades of this relentless push, expanding, modernizing, and navigating all these crazy challenges, what was the result? Well, by the 1990s, the outcome was undeniable. SBI wasn't just a big bank. It was the very backbone of the country's entire commercial banking system. Simple as that.
You know, the source material for this explainer puts it just perfectly. It says, SBI had firmly established itself as the cornerstone of India's banking sector. Think about that word, a cornerstone. It's the foundational piece that holds everything else up. That's what SBI had become.
But let me leave you with this one last thought. This absolute giant of a bank was forged in a very specific environment, a protected, nationally focused economy. So the big question is, what happens when all of that changes? What happens when India opens its doors to the world in the 1990s and a whole new era of global competition begins? Well, that's a story for another day. Thanks for joining me.
All right, let's dive into an absolutely incredible story of transformation. We're talking about how India's oldest and largest bank, an institution that's been around for 200 years, completely reinvented itself to not just survive the 21st century, but to really lead the charge. And that's really the core question here, isn't it? I mean, just imagine being a giant, rooted in centuries of tradition, and then suddenly the whole world beneath your feet starts to shake with a digital revolution. That was the massive challenge facing the State Bank of India.
So let's set the scene. Our story really kicks off at the turn of the millennium. SBI was staring down the barrel of two colossal forces, the explosion of the internet and a brand new interconnected global economy. This wasn't a time for small tweaks, it was time for a fundamental reinvention.
Now this is where you really see the scale of the challenge. The old world of banking was all about walking into a physical branch, dealing with stacks of paper, and everything moved at a slower pace. The new world, it's digital first, it's always on, and data is the new gold. For an institution like SBI, this wasn't just an update. It was like having to learn a completely new language, and they had to learn it fast. So what was their move? I mean, what could they do? They didn't just patch up the old system. No, they decided to build something entirely new. Their first major move was to construct a digital fortress right from the ground up.
This brings us to their massive technological overhaul. And look, the goal here wasn't just, slapping a website on top of the old system. It was about building a digital nervous system that could connect their huge network across the entire nation.
And the cornerstone of this whole fortress was something called a core banking solution, or CBS. Now, this is the really critical part. For the very first time, every single branch was connected to one central network.
This meant a customer in Mumbai could get the exact same service as a customer in a tiny village in Kerala. It unified the entire bank and completely transformed the customer experience, basically overnight.
So once they had that core system in place, SBI started building on top of it, layer by layer. First, they brought the bank right into people's homes with internet and mobile banking. Then, they tapped into India's game-changing UPI system. That's the Unified Payments Interface. It lets you instantly send money between banks with just a mobile number. This made digital payments a reality for millions. And finally, they started pushing into the future with AI-driven customer support. You see how each step built on the last? It created a truly modern digital bank.
But here's the thing. Building this amazing digital fortress at home, that was only half the battle. The world was shrinking fast, and India's economy was opening up like never before. The second great challenge was to start looking beyond their own borders.
And so, SBI looked outwards. They embarked on a really strategic global expansion. And this wasn't about just planting flags in new countries. It was about following the global currents of people and money.
And he didn't just dip their toes in the water. They went straight for the big leagues, the heart of global finance. Setting up shop in hubs like New York, London, Singapore, and Hong Kong sent a very clear message. India's largest bank was now officially a global player. So why did this matter so much? Well, there were two huge reasons. First, they needed to serve the millions of Indians who were living and working all over the world. And second, they had to finance the explosion in cross-border trade that was fueling India's economic growth. It was all about connecting the local to the global.
Okay, so they've got the tech, they've got the global reach, you're all set, right? Well, not quite. Turns out that's not enough to truly transform a legacy institution. You need that crucial human element.
And that brings us to the human engine behind all this change, a fundamental shift in leadership, a new vision, and a powerful, renewed commitment to the bank's core social mission.
This chart breaks down that new focus perfectly. The leadership put a huge emphasis on professional management. We're talking strong governance and really sophisticated risk management. But look at the balance. There's also this deep focus on both customer satisfaction and developing employee skills. This was about building an organization that was both professional and deeply people-centric.
And this quote, this really just sums up their entire philosophy. Even as they were modernizing and going global, the leadership made sure SBI never ever forgot its founding purpose. All this cool new tech and this big global strategy had to serve a higher mission: financial inclusion for every single Indian.
And you know, these weren't just nice-sounding words on a poster. SBI became a key engine for massive national initiatives like the Jan Dhan Yojana, a program that brought hundreds of millions of people into the formal banking system for the very first time. They used their new digital network to make this incredible mission a reality on the ground.
So what was the final result? After all of this, the tech, the global push, the purpose-driven leadership, how did it all pay off?
You have to remember, the bank wasn't doing this in a vacuum. It was up against these super agile private banks and flashy fintech startups. So they responded aggressively. They massively enhanced their digital offerings, used sophisticated risk analytics, and diversified their services to stay one step ahead of the curve.
So to sum it all up, the transformation of this banking titan really rested on these four pillars working together. You had the cutting-edge digital innovation, the strategic global expansion, visionary leadership giving it all direction, and that unwavering commitment to financial inclusion.
It's just a remarkable journey. SBI went from being a legacy institution that was at risk of being left behind to a powerful symbol of a modern India, blending tradition with technology, purpose with profit, and national duty with global ambition.
Which, of course, leaves us with one final big question. Having conquered the challenges of the digital and global revolutions, what comes next? As we head into an era of decentralized finance and even newer technologies, what will be the next great test for this modern banking titan?